All right, ladies and gentlemen, I hope you had a wonderful weekend. We have arguably the biggest week of the year on the way. Not only do you get the tariffs in Liberation Day, you get the non-farms on Friday, and then most importantly, in a weird way, the volatility is back. We failed the bounce over the 200-day. That's what that little rally was. And now that we are breaking away from this point compared to Trump 1.0, this is looking a lot different. And now people thought we were here, and now it's looking like you might be around here. So we got a lot to talk about. Like I am telling you here, it's not just the tariffs. There's actually a lot of confusing reports even over the weekend about walking them back and then being more aggressive. But when it's all said and done, right now looking at the VIX, there is a lot of volatility priced in for Friday in the non-farms. And even over the weekend, some people on Wall Street are talking about the payrolls being the leading event. So we're going to go over all of that. I got the keys, the plays, the pretty pictures, all that good stuff. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, off the bat, like we said, Liberation Day is here. That's going to be on Wednesday, and we are going to hear about these reciprocal tariffs. Then the next day, that's when the auto tariffs come into play. But now here's where it's getting confusing. Last week, the auto tariffs were more aggressive. Then Trump kept saying he's going to go light on these reciprocals, and then over the weekend, there was reports saying that Trump was privately urging people to be a little bit more aggressive. Then there was reports about confusion and that they haven't really fully devised a plan. So it was a little bit of cold water on some of the positive rumors, but when it's all said and done, I hope you are already feeling the vibe. Nobody knows what's going to happen generally when the tariffs do get announced. I've been talking about this since last week. I am expecting that it's going to be a clearing event, and people like Michael Hartnett, they do agree with me, and they think it is going to be all about the non-farms. But the point is, leading in to start the week, we end the month, you're still going to get a little bit of that quarterly volume we were looking for finally. Then you're going to hear talks and these rumors and confusion about back and forth. They even walk back the rumor. They said that Trump didn't speak to the automakers, and he said he didn't care if the prices go up. That was different than what we heard last week, but I believe over the next 2 days, Monday, Tuesday, you're going to hear a lot of back and forth. Tariffs get announced on Wednesday, and a lot of people are expecting that it is going to be lighter. So we'll see how the market takes it, and then from there, we see where we go with the non-farm data. And now the other part that I have here, the fear that what I just showed you with the market and where we're at, the fact of the matter is you rejected the 200-day. That was that key level we were looking for. The fact that you are brought back down here, this is changing the setup from what we have gone through already. And even if Liberation Day or some of the data is good, I still think now you got to work your way out of this volatility. So we'll talk about it now because I think this is going to play a big role, and there is a lot of eyes coming onto it. But before we talk about what to expect on Friday, let's talk a little broadly about what has happened here. We are ending the quarter. So you started off the year with U.S. exceptionalism, and everybody was excited about the dollar, and even Donald Trump. The markets were doing great. Then you had DeepSeek, and then by February, people are reevaluating stuff. You still were able to hit a high, and then that started to fade and then turned into this worry. And then by March, beginning to the end, it went from, okay, exceptionalism to no, maybe we should be worried, stagflation, inflation, all these things. And then the U.S. trade declined and the Euro trade ended up ripping. So that's the full context of how we got here. And now this is according to Michael Wilson. He pretty much outlined this over the weekend, and he was saying yeah, we're watching U.S. exceptionalism turn into humiliation. We are watching the end of spending by governments. That's what you're seeing with Doge. And now Mag 7 is now the Lag 7. EU stimulus is taking over. The Japanese deflation is now coming to an end. That's going to change global bond yields. And then China is coming back. So he's bringing up all of these broad factors because he is saying he does not think that the tariffs are going to change this. That's what you got to realize. This quarter, there was a dramatic shift, and was tariffs and Trump and politics part of it? Yeah, they were. But there was a lot of other things going on, and you have watched a lot of big shifts. Again, Europe's best start to the year, almost on record. Germany starting to spend, and they haven't done that since the fall of the Berlin Wall. The Japanese rate hikes and getting out of that situation, that's working. Again, Mag 7 from the best in the world to now underperforming. You know, all these factors are leading to a declining dollar when you started out this year thinking it was going to be a very strong dollar. Remember, we had a strong trade-weighted dollar. This isn't because of just tariffs, and now that's why what you got to keep your eye out for, even though the market is borderline ignoring the data. Michael Hartnett, he's saying he's going to be looking here this Friday. Pretty much if you get a very bad jobs print, that is going to determine what you do in April, whether or not it ends up being either more volatility, we get the market going lower, reflecting the other times in literally March, April 2022, or the non-farms hold up, even though sentiment and other things got bad. That'll buy you time to pretty much dance around and then hopefully work your way out of it. So I thought that was an interesting take. We're going to see how that all plays out on Friday, but now that's the big thing here. Friday, you got to watch out for it, but I'm going to tell you now, the market momentum is going to be key. And this is what we saw last week. You already ignored non-farms and CPI, and pretty much the way I'm looking at it is the same little worry that you were worried about from the last non-farms. Again, Elon firing, that's showing up on the data. That didn't materialize. Everybody ignored it. They reacted to consumer sentiment. That's essentially what you got on Friday. You know, every single consumer sentiment this year has actually caused a gigantic move, even though it's a soft set of data. So I think coming into Friday, everybody's going to be scared, and they're going to be like, yeah, this is where the data is going to show the firing. And then if it doesn't show up, I think it'll be a sigh of relief, but you're not going to be out of the woods. I do think it will kind of cool you down for the month, but when it's all said and done, I really wouldn't be looking for an immediate reaction on anything this week. I mean, I think that's kind of the whole theme. You know, Liberation Day, people are expecting it to be a little better. Yeah, there might be confusion. If it is a clearing event, you're not going to respond right away. People are looking at the non-farms. People want to react if there's going to be a big blowout. If it doesn't, some people on Wall Street are going to use that to build broader themes. But again, none of these equate to immediate reaction. So I think it's going to be a big week. A lot's going to be riding on it. We're going to get a lot of info, but I think both immediate and delayed reactions, that's probably going to be the tricky part. So we'll see where it all leads us. But either way, we have a big week ahead, and Viva Liberation Day? No, can I say that? I don't know. But let us get into the plays. So right off the bat, this is the first play I'm starting with. I closed out all of my UVXYs. Again, last 2 weeks when the market was bouncing, we were talking about UVXY, and then ahead of Liberation Day, volatility would spike, and that's what it did. Maybe I could have held it a little longer, but I decided to take some profits there, so maybe we reposition. But the way I'm looking at it is you straddle. You either go for the breakdown, and then we really flush and really create a new Trump 2.0. The market gets really bad. If everything from Liberation Day down to the non-farms is bad this week, we could see a lot more downside. I think there would be a good opportunity to play that. If we even just bounce back to the 200-day for volatility in a short flip, that's like another 4 or 5% away or something like that. So I think that's another great opportunity as well. So I'm going to be looking for straddles. We played those even on Friday. Like I was talking about, I wanted to adjust my strategy instead of playing so many times, maybe go a little bit bigger on the first one, and I did a straddle. We played the data. It was a hitter. I ended up selling too early, but still paid out. But if we get a large enough move, the straddles will pay out. The only way you're going to be losing is if you go a little lower, bounce, go a little higher, and then you kind of stay pinned. That is the only way you're going to lose. So essentially, if you get kind of stuck here on the week and this week ends up looking something like this, straddles aren't going to work. But if you have a breakdown or you get a break up, that is going to be able to pay those out. So going to be looking for those tomorrow morning. We'll see if we get opportunities. Hopefully I see you there on stream, but that is play one. Play number two, TLT, baby. So even Bloomberg, a lot of people are talking about treasuries and their role they're going to play. Again, even with the whole Japanese end of deflation there, that means higher global bond yields. You know, the deflation in Japan has helped anchor down global bond yields. So if they're exiting that, again, their rates are going up. That's going to have a little bit of an effect, I believe. As of now, after all these changes, U.S. rates are like the only one that are forecasted to maybe go down this year. But when it's all said and done, don't forget, all of this market downside, it is good if the yields come down. If TLT goes up with the market coming down, I think it's a fair trade because in the long run, as long as we don't get bonds blowing out, that will be a good thing. So watch out for that. If we watch fear volatility pick up, I do think TLT is going to be in play. And remember, it has a correlation there with the Japanese yen, so you'll be able to watch those I think one day on, one day off. But keep your eye out for TLT this week, especially if we get more volatility. I think you'll get a lot of action there, and that is going to be played too. And then finally, this one kind of two plays. One, watch Morgan Stanley bank earnings. They're right around the corner. Then you're going to get Netflix and Tesla. But remember, we just flipped Morgan Stanley. I got a small gain, ended up running a little bit more. Now it's came back down, but bank earnings are right around the corner. I do want to set up one of these plays. I think banks and financials will be important. Again, with everything going on and a difference between U.S. and the U.K. and Europe, I think that's going to be very important. So watch out for some of the value banks and earnings. That's like one side of it. And then HYG, high yield spreads. We were talking about that a couple of weeks ago. If we do break down and enter a new leg in terms of the market, HYG will do the same, and that's what people are talking about. So watch HYG to the downside if we watch the market break. Otherwise, I would ignore that idea. But besides that, we should have an exciting week. Let's see if the reactions confuse or not. We'll react when we're there, so I hope you're on stream. But Chatadonia, that is your watch list, ladies and gentlemen. Make sure Hydra Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, change is inevitable. So appreciate it while you got it. Let's go, baby. Don't wear yourself out, but don't ever forget. The harvest is plenty. The workers are few. So I'll see you there, baby. Have a wonderful night. I'll see you in the morning and horn.